The following is a presentation of TFNN. It is now time for the Trader's Edge.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. Do you believe in miracles? Yes! Unbelievable.
Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the December 10th marvelous Monday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and folks, I absolutely treasure your presence here today, and my outcome is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Hope everybody out there had a fantastic weekend. It is certainly great to be back with you in full health out there. Nothing like having health. That flu, that's gone. The coughing, the hacking, everything should be gone out of my system. What a great way to start a Monday. So let's go take a look at one of our tools. You could probably almost guess the tool that I'm going to talk about this morning. The tool is this, folks. It says a happy person, and I am definitely a happy person. A happy person is not a person in a certain set of circumstances, but rather a person with a certain set of attitudes. Now, what do you see? The donut or the donut hole? Which is it that you see? Think about it. What instantaneously in your mind, some of you may have had some donuts this morning, but what is it that you saw when you were taking a look at a donut? Now, I'm not talking to those folks out there that were eating apple fritters this morning because there is no hole in it. But when you take a look at the donut, is the donut or the donut hole that comes to your mind? You know the answer to that. How about this? How about the glass? Is it half full? Or is it half empty? What is it that instinctively comes to your mind? Because you see, the answer to those two questions, they help to understand, they help to identify whether you're just simply a natural optimist or a pessimist out there. And that can be very helpful, you know, in being able to analyze a set of circumstances that you might be faced with today. Because maybe you want to take the opposing view, or maybe you just want to make sure that you are taking the optimistic view when you take a look at things out there. You know, there's no difference. Let's just take another example out there. Let's take two people that work together that make the same income. One person is frustrated. The other person couldn't be happier out there, you know, is making hay with the money that it is that they're making. One looks forward to coming to work. The other, it's a real drag to come to work. Yet they both make the same level of income. Let's assume family life and everything else is really just about the same out there. One is happy to be heading home, feeling good about what they've accomplished, and the other, well, let's just say they're not so happy out there, folks. Everything in life can bring you joy. It's just simply the attitude that you carry with you that's going to determine your outcome of happiness out there. In fact, a happy attitude, folks, a happy attitude can help to create life's circumstances out there. If you want better circumstances, I say take a look at that donut, not the donut hole. Look at that glass as being half full, not half empty out there. It's often said that the happiest people are those who are too busy to notice whether or not they are. How about that, folks? Accept life unconditionally, as most people ask for happiness based on what? A set of conditions out there. Remember this, folks, a happy person is not a person in a set of circumstances, but rather a person with a set of attitudes. Let's go take a look at the happiness in the markets out here. And how was it that I decided I wanted to talk about happiness when we started off? Could it possibly be that I was just simply triggered by the universe who sent a message to each of us this morning about happiness? They were really talking about all the Happy Meals that were sold at McDonald's out there. Same-store sales for McDonald's rising 2.4% versus the estimate of 0.2%. They had a fairly pessimistic outlook towards what the this quarter, or actually the November, I should say, what November was going to bring, and they ended up with a optimistic view of what was going on out there. Now, I don't know, from an economic standpoint, whether it's good or bad that they're selling more Happy Meals in McDonald's. You know, what does that say? Does that say anything about the health of the economy? Let's go actually, normally we start off taking a look at the futures contracts, but let's go take a look at the happiness meter out there. Let's go take a look at McDonald's and see what it is actually doing, because it is up here in the pre-market, closed out at 88.48. If you are watching us on Tiger TV, that is the screen that I just popped up on the chart for you. Maybe you're listening in on the radio. Maybe you're listening on your mobile device, or I think it's your iPad, could be certainly a mobile device out there using tfnn.mobi. We absolutely appreciate everyone that is listening in, no matter what method you are choosing. You can always catch an archive of this show on Channel 9. That way, you'll be able to take a look at the charts. You'll be able to take a look at McDonald's and determine whether or not McDonald's has got the happiness meter going here this morning. As I said, closing out, as you can see, the week at 88.48. Trading out in the pre-market here at $90.09. So what is that trading into? Well, McDonald's is going to be trading into the downdraft from October 19th. If you're looking at it on my screen here, you can see that big volume bar down on the 19th of October. In fact, McDonald's had closed out the session on the 18th out at 92.86. Got down to a low on the 19th out at 88.55. Of course, it went on and it made its lows coming into November 16th, just like the market did, came down to a price point of 83.31. Now, that downdraft, maybe McDonald's, maybe the Happy Meal out there, because McDonald's is actually the number 5 weighting inside the Dow Jones Industrial out there. Number 5, and it actually happens to be 5%, 5.17%. In fact, it's tied with ExxonMobil out there. ExxonMobil also 5.17% of the weighting structure inside the Dow Jones. Why the Dow Jones? Why are we going to pay attention to the Dow Jones? Well, on Friday, we had the Dow up 81 points. The S&P was up 4. The NASDAQ was down 11. We know that's about Apple. Apple's actually trading down here in the pre-market this morning. The Russell 2000, safe. Totally flat out there, not providing us with information, or maybe that's not the case out there. But as we take a look at Apple and that gap down on the 19th of October, you'll see the top of that gap, and I'll go ahead and draw a line across the screen, because when the market opens, as McDonald's is trading, we're going to come take a look at McDonald's and see if it is rejecting the area, if this is going to create a resistance zone. It has not been tested, the top of the gap. I expect it will be tested today, with it trading out in the 90.11, maybe 13, 15 cents. It certainly wants to take on that price high, which is $90.25. If it gets up to 90.20, we'll call it 90.26, or anything above 90.25, closes back below 90.25 on less than 19 million shares. What that tells you is that you now have a resistance zone that is building on McDonald's out there, the number 5th stock inside the weightings, number 4 or 5 weighting structure inside the Dow Jones. In fact, we will probably spend, we will spend time trying to analyze what's going on inside the Dow. And the easiest way is to start from the top stock and work our way down. So we already have McDonald's. We know where that line is drawn in the sand. In fact, I'll set up a whole new tab, and we'll take a look at the Dow stocks that are inside there, just to understand what is going on from the standpoint, are we up against an area of resistance out here, or support, or just exactly what is going on, because the Dow has been acting very strong. As we know, King Dollar has been pulling back, in fact, or has been moving higher this morning, pulling back down 7 ticks, trading out at $80.33 right now. Gold is up $10 and change. That's 0.6 of 16. Silver having a little bit better morning, up 28 cents, up and down high. The $3. I don't know what it's like in your air travel. Was in Orlando over the weekend, and certainly gas was not at $3.05 out there. In fact, probably about a quarter or so higher out there. Nothing like seeing a gas war. I can only hope that they have one in sometimes. It's rainbows. That's why you want to take on the numbers out there. The Shanghai up 23 points last night. The Hang Seng up 85 points. Hang Seng up about 0.3%. The Shanghai up 1% out there. Our call-in number, as always, 877-927-6648. Let's go here. Is 6 1/4. Yes, Minnie, what we can see here, we can take a look at the pop. In fact, what I'll do out here, let me just make sure that I delete that from the screen here first. Then we can always add it back in here. We're taking a look at the pop and then the drop out there. This is the ES Mini. This is the 10-minute chart. We're taking a look at this Let me refresh my screen because I don't think I have all the active data out here. We're taking a look at the pop after the jobs report. Quite a candle session out there. We had the ES-Mini, the S&P futures trade from, as you can take a look at here, you can see that the S&P futures before the announcement had already traded into their oversold condition. Do you think it's possible? Is it possible that the market knew that the results or that that there was going to be a pop in the marketplace out there? As it had traveled down just prior to the release of that information into oversold territory. Well, in that first 10-minute session here, that is a wide-ranging bar for sure. In that first 10 minutes out there, we went from, or the S&P went from a low of 1408.75 all the way up to 1422 out there, where it ran into a little bit of resistance. And what did it do in that 10 minutes? Went from oversold to overbought. Just take a look at that set of indicators out there. And what does it have to do when you get into either of those? You got to work your way off. How do you work your way off? Well, you either move sideways. You know, you digest your food. Just think of it as having a big meal out there. How are you going to work off a overbought condition, an overeating condition, an over-mealed condition? Maybe you had one too many Happy Meals. You either got to work sideways or you got to work it off, right? If you work it off, you're going to go to the gym out here. That's what the ES-Mini did through the time period of about 11:10. So it sold off for a good couple of hours out there, made a low. Which, if we take a look at that low out here, you can see that didn't even make it down to the bottom of the breakout. And certainly that was a breakout. You have to pay attention. You have to give respect to those wide-ranging bars, those wide-ranging candles out there. You can see on the way back here, as was working off of that condition, what did it do? It didn't really have any wide-ranging bars to the downside. Of course, what happened here in the early hours this morning, about 3 o'clock, maybe about 5 o'clock this morning, the S&P started to get a little hungry. It got into a oversold condition out there. It needed some energy, and it's moved higher. 877-927-6648. Got a little full at 8:50 a.m. this morning. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks, and as we come back to these markets, you're relatively flat open out here. We're going to spend some time this morning during the next couple hours taking a look at each of the equities that make up the Dow Jones Industrials. Why the Dow? Why am I starting out taking a look at the Dow with you, as Tom would say, bisecting and dissecting? Well, the reason is we're going to go take a look at strength, right? We take a look at both strength and weakness just to get a gauge of what is going on in the markets, just to try to paint a picture of where these markets might be going. Well, if we take a look at the Dow, as I mentioned, closing up about 81 points on Friday. This is the Dow futures contract that we're taking a look at. Now, as we take a look at this, you can see this closing at the top of its session. Who's in control during Friday's session out there on the pop and drop that we saw after the jobs report? You know, folks, the jobs report, those numbers out there is a crime, isn't it? If you were a CEO of a publicly held company and you provided information such as our government does, you'd be not only would you be fired, it's public information that people trade off of. You'd be put in jail out there. They revised the numbers down, I believe, for both September and October out there. Can we really believe what they reported for November out there? It doesn't really matter. Let's just go take a look at the stock charts here. Regardless, you had the bulls, because this is nothing more than a war between the bulls and the bears, and the bulls certainly in control here. What is the Dow doing? The Dow is really trying to move into this little resistance area here. That's really the swing point high from November 7th out there, 13,251. So far, the high intraday today up to about 13,168. Doesn't mean it's going to hit it this morning, but it wants to get up there. If we take a look at, we can take a look at trend lines. Certainly, we can look at a trend line off of the high from October 5th out here. You can see as I do that little diagonal line, that suggests that the Dow wants to get up and touch that little horizontal area. You've also got the trend line coming off of the lows here from October 4th. You can see the Dow certainly was a weak link out there, and now all it's trying to do is get back and touch that area and test that area. It has not done that. So you've got all the signals. You've got a descending tops line that says the Dow wants to get out there and try to tag that. You've got horizontal resistance that says that the Dow trading inside the swing point here from November the 7th, that it wants to go out there and do that. You then also have the trend line that it broke through that has not been tested. So everything pointing to X marks the spot. In fact, it makes a little X out there. Of course, it looks like that X was probably a day or two ago, but that is where the Dow looks like it wants to head to. And we want to go take a look at each of the Dow stocks. At least, you know, all we have to really do is take a look at the top 9 stocks out there. The top 9 stocks. 9 of the 30 stocks make up 51% of the 52% really of the weighting structure inside the Dow. So all we have to really do is take a look at those 9 stocks and get an idea how much more room do they have left to the upside in any patterns that they are creating out there. That is why we are going to be spending time taking a look at the stocks inside the Dow this morning. Plus, you might be able to learn on some patterns that we'll take a look at. Apple we'll also take a look at the NASDAQ. Apple leading things down. As you know, there's no new story there. Well, Apple continuing with that move down here this morning, closing at 533.25, trading as low as 524 and change right now. I believe it's 518 and change is the low out there. So it looks like that low is going to be tackled this morning. Apple continues to trade down below there. You'll see the divergence perhaps where the Dow will be up again and the NASDAQ will be down, but really could be nothing more than really these 9 stocks out there. So let's also go take a look at the currency market and the international market. And then when we come back, the market will open and we'll spend some time taking a look at the Dow stocks. We can see here the euro gapping down when it opened its trading session here earlier this morning. You can see it was also moving down into an oversold condition. Had to work that way, had to work itself off. And that's really what it did coming into the 9 o'clock session. This is a 30-minute chart. If we put this on the daily chart out here, the euro really pulling back strongly. Over the last couple of trading sessions, the euro wants to move down most likely into the 0.786 level. I think it wants to come all the way back down to the lows and test November 13th out at 126.593 out there. Let's go take a quick peek here at the world markets. Now we're looking at the DAX. The DAX is going to be important for us to be paying attention to as we come into the 11:30 session. The DAX did trade down this morning, got back inside the range. What I mean when I say the range, I'm really talking about the swing point high from September 21st out there, 74.7853. So far, it has rejected that area. Makes you say, something to think about. If the DAX breaks out, that will lead the markets worldwide. It'll pull itself up. We'll see if that was a false break topside or not. We take a quick peek here at both the Nikkei. I mentioned the Nikkei had gapped up this morning and then traded down all night. The Nikkei has a strong sell signal out there, 2 patterns, both a Gartley sell and a butterfly sell. A quick look at the FTSE. The FTSE out here trading below the top of its horizontal resistance area. 877-927-6648. Be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it at less. Take advantage of this. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer identifies the best diagnostic deviation level spreads used to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page.
Relatively flat market here. Trying to push into when I put it on a daily chart. We want to take a look at the lows here on the 5-minute chart. We're taking a look at the gap down. The session at 9:35. This was on December the 6th out there. So that was Thursday out there. So gapping down or moving down that area from a weekly standpoint has volume. So what does that really mean? It really means the low of that hammer candle needs to be tested out there to provide you with some really good information. That low, 505.75. I was wrong earlier. I thought I remember what the price point, but it wasn't 505.75 that I said. So 505.75, that is really the number that you're looking at for a test on Apple. On a daily basis, that's got 45 million shares. If we go take a look at the weekly chart out here after the close of the week, last week, Apple moving down into that same bar on a weekly basis, but with volume. 140 million. It closed inside that level. That was the November 16th. That's what we're talking about. That's what it was going after. That only had 127 million shares to the downside. You get Apple to close below 505.75. Now, the question is going to be, will it have, if it does that, if it attempts to do that, is it going to have accelerating volume? Well, we already know that we saw accelerating volume last week. You get more than 140 million shares. You take out really all you need is 127 million shares. But if you have accelerating volume on the way down, you will see Apple move down to $355 or so, right around there, probably relatively quickly out there. So you're going to want to be paying attention to Apple out here. If we go take a look at things that are moving and grooving in the marketplace to the downside, Apple leading things to the downside, McGraw-Hill right behind them. MHP is the ticker symbol. They're off about $1.30 or so. You've got Diamond Foods, DMND, off about 7% this morning. That's down $1 and change. Apache Corp, CME Group, Federated, and Eaton Corp right behind them, all down less than $1 though. To the upside, we've got Nexen. Nexen is up 14%. I believe that is the buyout. Is that a buyout of Honeywell? No, that wasn't Nexen. Nexen is up 14%. That's up $3.41 out there. We'll take a look at that. Google is up. It's Intermec, I believe. IN is that's it. It's Intermec. IN is the ticker symbol. They're up 22%, but that is on the acquisition from Honeywell. You've got Unipixel up 15%. That's up $1.50. PPG Industries up $1.30. McDonald's, we talked about that earlier, up $1.19. That's up a little over 1%. IBM trading up 91 cents right now. That's about 0.5%. And lastly, we've got CLDX. CLDX is the ticker symbol. They are up 15% here. We'll take a look at some of these stocks. Let's go take a look at McDonald's. Let's go back over to the Dow 30 stocks out here, and let's start with McDonald's to see what McDonald's is doing. So what we talked about here on McDonald's, we talked about McDonald's getting up and testing the downdraft, the gap down, the open window from October 19th. That high again is $90.25. So far, so far, McDonald's Happy Meal getting up to $90.17 and trading just slightly down from there. So we'll see where it closes out. We'll continue to take a look at this. What we're looking for, quite frankly, to give us a piece of information, although it doesn't have to, would be nice if it gets above $90.25. whether it closes above it. If it closes above it, then it will drift higher, most likely into where the breakdown began, and that was the October 18th level. That could be anywhere from 92.61 to 93.75 out there. I'm just kind of curious here. See if there's any high-volume bars. And there is a big high-volume bar in McDonald's. Goes back to January 4th, 2011, $77 or so. But one thing at a time out. Let's also see, let's take a look at the weekly chart. So let me pop this back over to a weekly here on McDonald's. Let me refresh my screen. I want to take a look at the volume as it was moving through its most, on a weekly chart. Let's take a look as it closed below a swing point from June 8, 2012. That had 40 million shares. The low of that was 85.92. So that was 40 million shares. Closed below it on 39 million shares and then 31 million shares. So it's going to need some more volume to really bust out those lows and create what could be a rather large A to B equals CD down. If we take a look at what that looks like, you would be going up to the swing point high from January 20th, or the high 102.22, and I would use as my B point here right now, I would use the low of June 8, 2012. Again, a weekly chart out here, 85.92, and your C point looks like it is the high of October 19th, 94.16. Let me make sure about that. 94.16. That is your B point out there. 1-to-1 takes you to 78.49, but let's go take a look at what type of retracement that McDonald's did on the weekly chart. That means the retracement. That means the B to C leg. And what we can see is about a 50% retracement. So it says that McDonald's has energy to run lower and make larger than a 1-to-1 A to B equals CD down if it can bust through the swing point. It looks like I drew that line just a little bit off out there. Let me see if Stevie Son can draw a better A to B equals CD. There you go. So 77.84 or so, but looks like if McDonald's closes below 85.92, does it on more than 40 million shares, and it's pretty close, most likely will travel into the 73.41 level. We can also see here, actually, at the 1-to-1 A to B equals CD, you do have a high volume bar. That's January 7, 2011. So maybe there's going to be some decent support at the 77.59 level on McDonald's. Trading out right now at 89.25. And as we switch back to the daily chart out here, what we can see McDonald's doing, gapping up and now trading off. Something to think about as it moved into a area of resistance. Let's go take a look at number 2 out here. Number 2, I guess it didn't put that chart. I don't know why. But let's go take a look at number 2. That would be Chevron. CVX is the ticker symbol. Let's go see what Chevron is doing out here from a waiting. I guess I could look at number 1. We'll come back and look at number 1, which would be IBM. But let's take a look at Chevron, trading out at 107.38 this morning. Chevron getting up above a swing point, which is November 29th. That swing point, 5.7 million shares, getting up above that on Friday with 4.9 million shares out there. Let's take a look at this other swing point here, which will be November 23rd. 2.7 million shares and gets up above it on 5.7. So let's take a look at that. A to B equals CD. A little bit smaller, but still qualifies an A, B equals CD pattern out here. And what we can see is the 1-to-1 A to B equals CD would be completing maybe today or very soon. 107.80 would be that mark out there on just simply a small confirmed A to B equals CD. So far getting up to a high of 107.60. So 107.60 versus 107.80, we can say that that is pretty much completing its pattern. However, let's look at the retracement of that B to C leg. We can see very closer to the 0.618, which would be 102.50, actually getting down to a low of 102.76. We're going to call that a 0.618 retracement. That is the November 28th low out there. So we're taking a look at the number 2 dog out here in the weighting structure of the Dow, and what we can see here is that is completing an A to B equals CD up on the daily chart. Does have a real breakdown candle that I think would struggle to get all the way up there on Chevron. That would be the October 10th level, somewhere between 112.01 to 115. I don't suspect that's where it is headed, but you got to pay attention. Right now, you don't know whether these A, B equals CD patterns are complete or not until who shows up. Well, on an A to B equals CD up, you'd be looking for the bears to show up, and I don't see any bears here just yet. So CVXO is completing a 1-to-1 A to B equals CD. That is providing you with information. Let's go take a look at the lead dog out here, IBM. As I mentioned earlier, IBM was up, still is up. It's up $1.04 here. So let's go take a look and see what IBM is traveling into. We're going to see if this is completing the pattern. Well, how about that? It most certainly is. And that pattern is, it's coming into an area where it most recently broke down. Let's just go ahead and move this black horizontal line if you're watching us on Tiger TV, so we can see that is a tested area of resistance. That is the downdraft candle, or the gap down candle, the window candle that is open. That is from November the 7th out there. The high, 193.68. That has only 4.7 million shares. As IBM came up into it, came up with 3.8 million shares. On November 23rd, didn't have enough to bust it up. It is on Friday, 4 million shares. So that was 4 million shares going into 4.7. Still not enough to bust it up. Right now, today, it's testing that area. The high so far, 193.38. That 193.38 going into 193.49 and 193.68 out there. So very possible that the number one dog in the Dow is moving up into also an area of resistance. So we're going to come back and we'll certainly take a look at that as well. Let's go take a look at the number 4 dog out there in the, not that it's really a dog, but we're just simply calling it a dog. Maybe it's number 4 cat out there. Let's go take a look at it. It's ExxonMobil. XOM is the ticker symbol. So as we take a look at ExxonMobil, let's go see what it is doing. Well, first you got to stay on the chart, Steve. So let's see, ExxonMobil here. Exxon trading out at 88.85. Now, let me just erase everything off of my screen here. So ExxonMobil is running up into a swing point. That would be November 23rd, 11.9 million shares out there. That is the, okay, you know what? So November 23rd, that is the Friday after Thanksgiving. So anytime I say November 23rd, you're supposed to say, Steve, that's only a half day of trading session and a light one at that, and therefore you'd want to go ahead and adjust the volume numbers out there. So I believe when we were taking a look at IBM, was going against November 23rd level and didn't even have enough volume on Friday out there. So you'd want to go ahead and adjust the volume there. In this case here, you've got 11.9 million shares. Now, as far as how you would adjust the volume, shoot, one way you could just do it is it was a half day of trading, so you could just double it. Say it was maybe about 22 million shares out there. Of course, that's really going into the downdraft that had 20 million shares on November 7th out there. So today, so far, you've got ExxonMobil that's done 913,000 shares, 17 minutes of trading, coming back and trying to take out this area, this swing point from November 23rd. If it does, then ExxonMobil would be setting up an A to B equals CD. So let's go take a look at that potential pattern. ExxonMobil, something we're going to have to check back into certainly during the trading session. So if it can take out, if it can take out November 23rd on more than, we'll say, the easy one, if it can do it on more than 12 million shares, it does theoretically set up an A to B equals CD. However, we know that's a light volume trading session. What would that do? That would set up ExxonMobil to move to $90.29. Now, what's the beauty about that A to B equals CD pattern out there? What is it you'd actually like to see, especially if you like to trade the Doug or the DIG or the XLE, the energy sector, maybe one of the triples out there? You'd actually like to see this A to B equals CD complete out here and do a 1-to-1 and do it on less than 20 million shares, certainly doing less than 11.9 million shares, because then it runs into this gap down. That is the 19 million shares, the downside from November 7th out there. That high is $90.24, and a 1-to-1 A to B equals CD would be $90.30 out there. ExxonMobil, it's like about 30% or so of the energy sector out there. Let's go to Lou in Nashua, New Hampshire. Lou, thanks for calling. Thanks for holding. How are you this morning?
All right. I was looking at the TZA.
Okay. Let's go first. The TZA, folks, is the ultra short for the small caps, Russell 2000, the IWM out there. So let's go start by taking a look at the IWM, see what that is doing here today. IWM has been really struggling here for the last 5, 6, 7 trading sessions or so. If you want to trade the TZA, good to go. What you don't want to see it do is you do not want to see the IWM, and this is your benchmark. You do not want to see it close above 82.88 out there. Maybe the exact number that I would use would probably be the high of November 2nd, 82.95. If it does that, the IWM, Lou, will travel at least to 83.45, maybe 84.15. That is, you'd rather see it actually move a little bit higher and test 82.95, reject that on less than 39 million shares. That would be your better trade setup, all right?
Okay, great.
You bet. All right, folks. Dow up 25 points, S&P flat. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. We've got the Dow up 23 points right now. S&P really flat out there, up 33 cents here. Priceline getting slashed here this morning. Let me see if there's some news behind it. Priceline down 4%, down $27. I don't see any news on this, so let's go take a look at the stock chart and see what it is that we see out here. So as we take a look at Priceline, one of the things that should pop out at you right away is the large sell-off, the downdraft, that was in this equity on August the 8th, 2012. Gaps down 6.7 million shares out there. Now, what you want to do here, what we're going to do is we're going to go put the line across the bottom of the gap down candle, the prior session where it broke down, the August 7th low, 672.76. We're going to draw a line straight across on our chart out here. That is the black horizontal line. That is your first area. Well, that is really your primary area of resistance out there. That is an open window. It has not been fixed. In fact, now, as we take a look at this, there's really two areas that you benchmark a stock as. It's either coming into a breakout area. In this case here, we're just flipping the chart over. It's coming into a breakdown area. Works the same way no matter what, either breakdowns or breakouts out there. Now, so you're benchmarking it really against the 6.6 million shares, but you can also go ahead and benchmark it and get an idea of the August 7th candle, which is 2.8 million shares. As Priceline moves up there, on December the 3rd, here's the beauty on this one. Talk about the setup. Where were our eyes? Because they weren't here on Priceline, but it gave you the sell signal most certainly on December the 3rd out there. It moves up into test out that window, and it does with 878,000 shares out there. In fact, 2 sessions earlier, it had gotten up to the price point of 672.44. 672.44 was still not enough to test the low, but it got up there with just about 1.1 million shares out there. Oh, here we go with this thing again. It's a good Monday morning. It takes forever for this little upgrade discount thing that's on this system. We got to find some way to get rid of it. And so that will just pop up on my screen here for a while. My apologies for that. So let's talk about Priceline here. What Priceline did, came up the second time to test on lighter volume, 878,000 shares, rejected that area. And then what we had here was we had a series of small-bodied candles, dojis, or just simply a spinning top high wave candles. Either way, it meant that the market had lost its energy to the upside. That was December 4th, December 5th, December 6th out here. Traded lower on Friday, gapping down this morning. Volume here this morning is 392,000 shares. Now, here is going to be the key on Priceline. We'll be providing you some information as to whether or not this is just going to be in a little bit of a consolidation range. Is going to be 2 areas of support out here. So those 2 areas of support, the first one, we'll call it S1 or support 1, just because it sounds fancy out there. That is going to be the low. We can use the low of, let's see here, 611.55, 611.30. Let's just simply, either way, it doesn't matter. Whether it's the low of November 16th or the low of November 15th, I'll just leave it on November 15th candle. So it's going to be that 611. It's really going to be the 611.30, the November 16th, just to be technically correct out there. That has volume of 883,000 shares. Now gapping down this morning with 402,000 shares in 27 minutes of trading. You tell me. I think it's got the volume to take that area out. Certainly going to trade into the highs. The high of November 16th is 623.69. I suspect it will go ahead and it will blow through S1, support 1, and it'll move all the way down to this next support level, which happens to be the gap up from November 1st out there. That price point is the high of November 1, 586.84, 1.2 million shares. Time absolutely just flies. Folks, have a great Monday if you're off to start your day. If not, stay tuned for the Money Master Show, which will be up next. Have a great Monday, and I look forward to seeing you in the morning.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.